morning. You're watching Buy Now Sell Now on ET Now with me, Shreyanshi Singh and Ankita Saxena. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at the markets and a good start to the week, Ankita.
Absolutely, Shreyanshi. In fact, what a stellar start to the week, I would say. This is the 5th consecutive session that we are advancing. In fact, Nifty is sitting pretty at all-time high, 3-month all-time high, intraday. And so is the Nifty PSU Bank that's sitting at 3-month high intraday. Now, we managed to scale above those 24,000 levels. We are, in fact, above the 24,100 levels at the day's highest point, trading at the highest point right now. On the Nifty, up 1%. Nifty Bank continues its outperformance. In fact, that's trading with gains of almost 1,000 points there. 1.8% the gain coming on a Nifty Bank. We are sitting at the highest point of the day. 55,314 is where Nifty Bank is at. In fact, the PSU pack within the Nifty, within the banking pack is firing on all cylinders. In fact, the PSU banks have been on fire, have been consistent outperformers in this market. Maharashtra Bank is up 5%, PSB is up 4%, IOB, SBI, Central Bank, they're all trading with gains of 3% odd. So the entire PSU basket is really, we are picking up the entire financial basket there. So PSU doing very well. Also, if you look at the broader markets, let's look at the mid cap and the small caps as well. They are trading, mid cap is up 1.7%. Small caps also trading with gains of 1.3%. So both of them are outperforming the benchmark indices in today's trading session. And if you look at the top gainers, then no points for guessing. IndusInd Bank is leading from the front with gains of 5%. There's also Tech Mahindra, Bajaj Finserv, Trent that are doing pretty well in trade today. Also Axis Bank, SBI lending their support to the Nifty. But on the losing side, we have Adani Ports, we have HDFC Life. HDFC Life also came out with its numbers. We have ITC, HUL, Nestle, Sun Pharma that are not doing well in the trade. In fact, all the sectoral indices are trading in the green, barring the FMCG pack, which is trading with cuts of 0.8%. So all the sectors in the green, PSU leading from the front, but FMCG not doing too well in trade today, trading with cuts of 0.8%. So largely that's how the market is shaping up. If you look at the stocks that are sitting at all-time high, that have hit record high today, is HDFC Bank, ICICI Bank, Bharti Airtel, Bajaj Finserv. They all hit all-time high in today's trading session. So market breadth looks very, very positive, Shreyanshi. A good start. And another very important thing to mention here and why the markets are doing so well is that the dollar index has really cooled off and has remained sub 100 levels for a while now. In fact, dollar index is at 98.3, which is a great news for emerging markets like India.
A lot of moving pieces to this entire story when it comes to the dollar and even to Trump's tariffs, and we've been getting a lot of headlines. So lots to monitor as we kickstart the week. But let's do just that. Let's kickstart taking all of your stock-related queries. But before we do that, take a look at the number that you can write to us at, flashing on the top of your screens as well as on your screens. Do remember to mention the buy price for the stocks that you're already invested in. For the ones that you hope to be investing in, mention the time horizon that you have in mind so that our experts can help you better. But with that, let's also kickstart taking your stock-related queries. But before we do that, I quickly wanted to also, first things first, let's introduce our guests because we do have Kunal Bothra joining us on the show and Gaurang Shah, who's a Senior Vice President at Geojit Financial Services. A very good morning to the both of you. Kunal, I wanted to take the first question along to you because before we start taking all of our stock-related queries, I wanted to quickly check in with you about the IT pack because it's the new week that we're kicking off at this point. New week, new story, or are we going to see a replay of the last week for the IT?
Good morning. I think it's heartening to see the indices doing exceptionally well. Nifty back at 24,000 mark, as well as the Bank Nifty back at lifetime high levels. Now, in that context and the setup which we are trading right now, I strongly believe that we should be in for a much more stronger bout of short covering for the IT stocks very soon. My sense that many of these IT names, the likes of Infosys, TCS, HCL Tech, Tech Mahindra, etc. I think these formidable large cap names, they've been showing formidable signs of bottom formations or at least oversold indicators on the weekly as well as on the monthly charts, and that I believe could be a very strong indicator as well as a trigger for these stocks. And we've hardly seen a phase of a market rally where there are heavyweight sectors like Nifty IT index, which constitutes almost 20-25% of the index component. I think that remains to be an underperformer. So I believe eventually it's a matter of time there would be a point where the banking index would start to cool off or go into a consolidation. And I think in that breath, we would probably expect the banking stock, the IT stocks to perform exceptionally well. So my view for the IT index is a strong short covering, which could be due potentially over the next 1 to 2 weeks.
Right, Kunal, besides IT, talk to us about Nifty Bank, because that, the entire financial basket has been a common consensus. And look at the rally that, the banking pack is giving. In fact, it is leading from the front, as we were penciling in that the banking pack is going to lead the next leg of rally. Some of the counters are sitting at their all-time highs. From here, what is the upside that you see? What are the levels that you're working with as far as Nifty Bank is concerned, and also the PSU basket in specific, that is really lending the support to the banking pack?
Well, yes, Sankita. So, let's go back, I think maybe a few weeks back, where the major consensus was that, the banking index would start to outperform. But then the start of which happened for the banking index was led by large cap banking names. So you look at the first three top private sector banking stocks. It was Kotak Bank, which managed to make a new high, followed by ICICI Bank, and then HDFC Bank. I think in that context or in that order, which managed to make a new high for themselves. So when you have formidable large cap names which lead the charge, eventually it oozes confidence across the rest of the other pack. And then you see many of the other mid cap private sector banking names. You saw Axis Bank recovering quite strongly. IndusInd Bank recovered from its major lows of 600 odd. You've seen IDFC First Bank, and now the PSU banking stocks are showing signs of strength. This indicates that this is an entire sector move, first led by large cap names, then the mid caps and the underperformers make a comeback. I believe that many of these stocks, from here on, and especially the underperformers, could probably see a potential rally of at least another 5 to 10% over the next maybe 1 to 2 weeks. So expecting a further up move, maybe a slight churn which could happen within the banking index, but I believe that there should be a potential up move of 5 to 10% for many of these private sector as well as the PSU banking names.
Alright, and that's the sectoral view coming in as far as those two sectors are concerned. Tell you what, Gaurang, I'll take the first query that we have this morning to you, because we do have Amit who's writing to us from UAE about 500 shares of Manappuram Finance at 175 rupees. That's the buy price for him. He wants to know if he should be buying more or booking profits at this point. What do you think?
Well, thank you so much for having me on the show. Good afternoon to you, good morning to you and to all. Gold is the magic word, right? For gold loan companies as well as for gems and jewelry sector. Now, as far as Manappuram is concerned, on the fundamental side, our sense is that other than the changes in terms of policy stance for the gold loan companies and a little bit of reference that the Honorable RBI Governor made during his credit policy speech on gold loan companies, we need to see how things are going to change. There is no clarity as yet, but we have a positive coverage. We have an accumulated stance on Manappuram Finance from a long-term point of view. So if you are a long-term investor, if you're not in a hurry to book out, you should stay invested, subject to, of course, you have that kind of time horizon.
All right, that's the view coming in on Manappuram Finance, Gaurang. I'll come to you then, Kunal. Happiest Minds, this is Poonam Anand who's writing in about Happiest Minds. I think she's bought 50 shares for at 624 rupees. There's no query as such, but what should she do from here on? What are the levels that you're watching out for? I mean, she bought it at 624, so she's clearly sitting at a loss right now. So tell us from here on, what do you see in for this counter?
So now, I think at current levels of 582, if I'm assuming that you're holding on to the stock, you can continue to hold on. And, the stock has come out of a deep oversold indicators. I think from this level of 550, sub 550, where the stock was 1.5 odd week back towards 580 plus mark, there seems to be a zone where the stock is, capable of coming into a V-shaped recovery. So my expectation is hold on to the stock as of now. Maybe 650 to 700 could be a zone where you may consider booking out profits. But then think of it as a manner that this market has been a lot more vibrant, devoid of stocks which are such stocks. So I think it's always better to try and park the money or investments back into those solid names. So I think what you need to do is just take a strategy call. Maybe at 650, 700 you can do the churn. But I think it makes a lot of sense to try and exit the stock at those higher levels, and then look out for formidable large cap names, whether it's banking, financials, or some other sectors.
Alright, and Since you spoke about banking just now, Kunal, tell you what, let's also take the next query coming in from Ignatius, writing to us from Calcutta, wants to know about 100 shares of SBI Gaurang at a buy price of 808 rupees thereabout. What do you make of this one?
Well, let me give you a brief idea about what we think about the entire financials, whether it is private sector banks, public sector banks, or strong NBFCs. Our understanding is that this is one sector that's going to be in the spotlight for all the good reasons, not only on the earnings front, but also in terms of growth as we go into the future. We at Geojit Investments Limited have been recommending a dedicated allocation towards banking and finance from a long-term point of view. To answer your questions on State Bank of India, we've been maintaining a positive stance, and though the Q4 numbers would be out possibly next or the week after for State Bank of India, our understanding is that they should do reasonably well. As of now, looking at the earnings that have gone by, we have kept a target of somewhere close to about 930 from a long-term point of view. Would advise and hold. And if you do get dips on bad days, then you should look at fresh investments as well in a phased out manner. In case if the earnings are better than what the street estimates are or our estimates are, we would revise the targets upward. But currently, 930 is the target from a long-term point of view.
930 target for SBI. But moving on then, Kunal, I'll come to you for the next query. This is Sujit, who's writing in from Kolkata. He's bought 2,000 shares of Vodafone Idea at 7 rupees. After the current development, what will be a reasonable target for Vodafone Idea, given the stake that the government has taken in the capital infusion for Vodafone Idea? Where do you see this stock headed?
See, it's very difficult to answer that because, frankly, it's been plagued with so much of news surrounding the stock price. The only thing which I can say is that, the stock seems to have formed a base at the 6 to 6.5 odd zone twice in the last 6 months. I think if I'm not wrong, November, December 2024, the stock had hit levels of 6 to 6.5, bottomed out, went up to as much as 10.5 levels, and even the recent low was around the 6 mark. Since you've purchased at lower levels, I would suggest that you can hold on. But again, the question is that whether you want to stick to this stock, whether it's one of the core stocks which you have in your portfolio, that's something which could be questionable as well as debatable. But other than that, I think if it's a part of your overall structure of your entire portfolio, and especially on the mid cap category, I would suggest a hold on Vodafone Idea. Since you've purchased at lower levels, you can expect targets in the near term closer to 9 to 9.5.
All right, then the next one that we actually have is coming in from Mohit, writing to us from Ludhiana. Gaurang, he's writing to us about HDFC Life, 200 shares at a buy price of 599 rupees. Can hold on for the next 2 years. Of course, you do have HDFC Life. That stock is today on an intraday basis. It's taking it a little bit on the chin on the back of that weak APE growth. That is something that we saw missing estimates for the fourth quarter. Nonetheless, you do have Nuvama that has maintained a buy on that counter. So you do have a couple of stories working out as far as HDFC Life is concerned, but the stock is taking it on the chin. And Mohit wants to know, for 200 shares at a buy price of 599 rupees, what should he be doing?
Well, first of all, the investment is at a very comfortable zone. Let me say this from a long-term point of view. And if you have to look at the entire insurance pack, we have been positive, structurally positive on the life insurance related sector. Companies like HDFC Life, ICICI Pru, SBI Life and LIC features in our fundamental coverage. The only thing is, the earnings improvement is visible a bit, but for the momentum to catch up will take some time. If you are invested in life insurance related company like HDFC Life from a long-term point of view, if you are not in a hurry, again, I would say that continue to hold on. We expect the new insurance premium run rate to go up in the next couple of quarters, which will translate into profitability being much better than what they are reporting.
All right. Well, it is time for a quick breather there. Don't go anywhere. We'll be right back. You keep sending in your queries and we'll get them answered by the experts. Welcome back. You're tuned in to Buy Now Sell Now, where we are getting all your questions answered by our experts. The number is flashing on top of your screen, so start sending in your queries, the buying price of your stocks, and also the holding period and your question, and we'll get them answered by our experts. And we have Kunal Bothra and we have Gaurang with us. So let's resume with all the queries then. Let's This is Bala who's writing from Coimbatore. He's holding 155 shares of Motilal Oswal at 699. He wants to know if he should add at the current price and would it be a good hold for the next 1 or 2 years. Perspective also suggests a stock for the short term for the next 3 to 6 months. Kunal, you take this question.
Yeah, so I'll start off with Motilal Oswal. I think it's a good stock to hold on to. Maybe I think it went through a rough patch or a rough time over the last 3-6 months, where there was a sharp correction, more than a 40% or a 50% correction, if I'm not wrong, from 1,000 to 500ish, for Motilal Oswal Financial Services. But I think now the stock seems to have formed a major bottom or base at this 500 mark. Risk reward is also very attractive if you're looking at buy at current levels. With respect to the others, query which you asked, regarding a stock or a set, I would believe rather than looking at a stock specific, I would look at maybe few sectors which have been huge underperformers. I would sense metals, autos, IT. I think these stocks would probably make a very strong comeback. Because eventually these are high betas sectors, and when the risk appetite comes back for the markets, you eventually see that many of these stocks from the sector would make a strong comeback. So I think there are a lot of opportunities. The risk reward is also fairly attractive. So I think other than banks and financials, which have been very bullish on, I think it could now be time that you could look at parking money into these kind of pockets.
All right, then that's a take coming in. As far as good pockets of value are concerned in this particular market, but Gaurang, tell you what, the next one that we have is coming in from Payal, writing to us from Dubai. Wants to know about three counters, Trent, L&T as well as Reliance Industries. What do you make of all three of these with a fresh buy in mind?
Well, so I'll first comment on L&T and Reliance because that is where we have the coverage and we've been positive on both these companies for a pretty long time. Our stock picking is excellent in terms of long-term investment idea. Let me say this. So on both Reliance as well as L&T, I would recommend go ahead and buy it. But only thing is, since there is a little bit of uncertainty in terms of this tariff 90-day window, etc., etc. Don't know how things are going to evolve in terms of uncertainty. So, don't put all your money at one time. Start at current levels and on dips whenever you get it, you can add on to it. As far as trend is concerned, well, it has been one of the outstanding performers in the last maybe 1.5, 2 years. Off late, after making an all-time high, we've seen a downward trajectory. We don't have specific coverage on trend, but we do like the sector. We have coverage on Aditya Birla Fashion and Shoppers Stop. So the retail sector looks quite interesting. It belongs to Tata Group, again, a niche and marquee group, has got very strong balance sheet. Won't be able to give a specific on buy, sell and hold on trend because we don't have coverage, but one of the strong competitors in its sector.
So that's the word coming in on trend and the retail space. But moving on then, coming to you, Kunal, this is Soma Shekhar from Bengaluru. She wants to know the short term, about 6 to 10 months period. She wants advice on Kotak shares that she's bought at 1,800 rupees. She's bought 10 shares. She wants to know whether to hold it or to sell and what should be the target. SBI we've already spoken about, so we'll go with Kotak then.
So very bullish on Kotak Bank, and I think since the stock was one of the leaders in terms of the price move in this last 3-6 months of the market rally or the rally for the banking index, I would sense that it could continue to charge premium for the entire sector. And generally we see that these stocks, they generally they don't top out very easily because you see stocks like Kotak Bank are also low to moderate beta stocks. And when they come out of 3 years, 4 years of consolidation, in this case, it's almost like a 4.5 to 5 years of consolidation for Kotak Bank. We expect that the stocks rally for at least 1 to 1.5 odd year, if not more. And I think in that context, I would look at, say, potentially a target of 2,400 to 2,600 also possible for Kotak Bank. So if you're looking to book profits and assuming if you have the time frame further of, say, another 6 months to 1 year, I would suggest that you can continue to hold on to Kotak Bank at current levels also.
And that's a take coming in. As far as Kotak Mahindra Bank is concerned, remember viewers that the number that you can write to us is flashing on the top of your screens. But with that in mind, let's also take the next query coming in from Harsha, writing to us from Chennai. Gaurang wants to know about IDFC First Bank, 500 shares at a buy price of 72 rupees. Now this is obviously, he's sitting at a loss at this point. So what do you make of this one then?
Problem with IDFC First Bank has been in terms of the exposure to the MFI segment, and that was one of the reasons why in Q2 and Q3 we saw a little bit of it on the bottom line because of the provisioning. Post that, the management has been vocal enough to give a guidance towards the recovery process, and that might materialize in the next 2 or 3 quarters. So the health of the balance sheet is going to improve going forward. On the fundamental side, we do have a positive coverage with the targets somewhere close to about 71 rupees. But let me say this, if the improvement in the earnings and recovery as far as MFI segment loan is concerned is better than expected, then these targets would get revised. If you have got invested at higher levels, but you can add on to the stock, not today, but whenever you get a dip, maybe close to towards 60 or below 60 would be a comfortable zone to add or make fresh investments on IDFC First Bank.
All right, moving on from the banking pack to the sweet sugar space, then Kunal, this question is coming from Pratiksha from Oman. She says that she holds Balrampur Chini and AID Perry, that she's making a profit of 5%. She wants to know if she can hold it for the next 3 to 6 months. What target can she expect for both the stocks in the next 3 months? Also, she wants to know if AID Perry is a good stock to hold for the long term. Now, fundamentally, sugar companies look good. Volume realizations are likely to drive gains for sugar companies in the future, I mean, on a funda basis. But on the technical levels, what do you see for AID Perry and for Balrampur Chini?
See, both of them are good, very good quality names. In fact, you've picked the best stocks from the entire sugar pack. So I don't see any reason for you not, or rather fretting over, whether you want to hold on to the stock or not. I believe both these stocks are a hold. So that's what I would sense from a long-term play. And also, I think on the short to medium-term charts, I think these stocks have been one of the few first sectors to try and bottom out first. I think if I'm not wrong, Feb mid is where Balrampur Chini as well as AID Parry, they managed to bottom out for themselves, and then you've seen initially a gradual rally, and now you probably expect the pace to pick up. I would sense that in these kind of market situations, we expect at least a 15 to 20% rally for these stocks from their previous major swing lows, or at least 50% of the cover of the entire fall these stocks had shown from their September high. So I would sense that there should be a further rally for both of these names, and as it is, that these are very good quality stocks from the entire sugar pack. So in both of these regards, I would suggest a hold.
Alright, and that's the take coming in as far as some of those sweet gains are concerned for those two sugar counters, AID Parry as well as Balrampur Chini as well. But Kunal, tell you what, the next one is coming in especially for you because we do have Subrata Mukherjee writing to us from Kolkata about ITC. I'm very curious to know what you think about this one.
Well, yeah, continue to be very bullish on ITC even at current levels. In fact, X of this ITC hotels now I think at 420 plus mark for ITC. I also sense that many of these FMCG stocks could make a strong comeback for themselves eventually going forward. I think at 420 the stock is placed up quite well. The only concern with a stock like ITC, maybe not a concern, but the only aspect about the stock like ITC is that at current levels, the beta of the stock could be very, very low. And that would probably give you a sense that maybe if, say, assuming the index rallies further, then you might probably expect a very slow gradual pickup of price action for ITC. That generally unnerves a short-term investor. But since my assumption is that if you're a long-term investor and patient enough, I would suggest that ITC could be a good buy at current levels, provided you have a long-term time frame.
All right, moving on from ITC, Gaurang, I'll come to you. This one's for the banking pack. This is Balan writing in, wants to know about IndusInd Bank and Federal Bank. Are they a good buy for the next 6 to 12 months? So his time horizon is 6 to 12 months. I would take a year's time. Financials are, of course, firing on all cylinders right now. In fact, financials are leading from the front. But specifically for IndusInd Bank and Federal Bank, what would be your take?
Well, so from a longer time perspective, we would recommend, we are positive on both the banks, though with IndusInd Bank, there was a sad episode in terms of the derivative loss and the hit that they are likely to take in the fourth quarter reported numbers, which has not yet come through, close to about 1,900 crores, if I'm not mistaken. And if I am, I stand to be corrected on that number, which will have an impact on the earnings, at least in the fourth quarter, and maybe some slippages. If it has to happen, it may have slip over effect in the first quarter also, but that's a little bit premature to say. From a long-term fundamental outlook, we are positive on both Federal Bank as well as IndusInd Bank. But like I've been maintaining, phase out your investment. Don't put all your money at one time, but it is prudent to make a beginning and then on dips, add on to the stock.
The take coming in as far as IndusInd Bank then is concerned. Tell you what, it's time for a very quick breather on the show. But as we slip into a short break, the number that you can write to us, the WhatsApp number, in fact, is flashing on the top of your screens. Do remember to write to us on that number. Don't call us because we won't be able to take your queries that way, but do write to us and we'll be happy to take it. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. The next one that we actually have, Kunal, is coming in from K. Venugopal Reddy, writing to us from Hyderabad. Wants to know about Bank of Maharashtra. Can it be accumulated at the current market price for the next 6 months in mind? Because he did buy 277 shares at a buy price of 48 rupees earlier.
Yeah, and my assumption is that again, this may not be one of your core investments. You may probably have a lot of PSU banking names and you want to add on to Bank of Maharashtra. If that's the case, then I think it's a good stock where you can look to start averaging out or buying at current levels also, because it seems like that on the monthly as well as on the quarterly charts that the stock is coming out of a major oversold indicator. So almost like 7-8 months or 9 months of price correction for Bank of Maharashtra from 75 levels. The stock had fallen down to 42, 43 as a support. So I think from there on, this seems like a potential candidate for turnaround. Risk reward is very attractive. Puts a risk to buy.
All right, moving on from Bank of Maharashtra to another banking counter from the PSU pack, that's PNB. Gaurang, I'll come to you. Ravi from Vijayawada here. He wants to know about prospects for PNB Bank. Of course, we've spoken about the PSU pack, but tell us about specifically for PNB.
So, this is also, actually PNB used to be one of the notorious public sector banks in terms of the asset quality and numbers reported. But there's been a significant amount of improvement on the earnings front because of the dedicated effort that the bank and the management put in place to recover. So we've seen lower gross net NPAs, we've seen provisionings coming back, asset quality improvement along with that, margins and profitability improving. We do have a positive coverage on Punjab National Bank. We have a buy recommendation from a long-term point of view. So if you invested, stay invested, or if you have kind of a view in terms of buying the stock, then phase out your buying and start accumulating at current levels and add on dips.
And add on dips, that's the suggestion coming in there for that particular counter. But moving on, the next one that we have, Kunal, is coming in from Indu, writing to us. Wants to know the technical perspective, in fact, when it comes to a couple of counters, so delivery as well as Restaurant Brands Asia. What do you think about both of these from a short to medium perspective?
So delivery as well as RBA, Restaurants Brand Asia, I think both of these stocks, they look attractive on the short-term charts. In fact, the volumes over the last 1-2 weeks have been much on the higher side, specifically for delivery. That indicates that maybe a major bottom could be at place. I would suggest don't look at this as just about a swing trade over here, because if in case these volume patterns are something to go by, then we may be looking at a major bottom formation for both of these stocks. That pattern would probably evolve itself over the period of months as well as quarters. So I would suggest that have an investment time horizon over here for both of these names. I understand both of these stocks are very high beta, but just purely looking at this volume pattern, I would suggest that it makes a lot of sense for you to hold on to it for long term.
All right, moving on then, that's the view coming in. But I'll come to you, Gaurang, then. This is Satya Venu's writing from Hyderabad. Okay, this one is for Kunal specifically. Kunal says that he's a big fan of Kunal. He's a long-term investor, but he's purchased TCS at 90 shares for 4,110. Wants to know if he can exit or average in at what price. Please guide.
Thank you so much for that. See, on TCS, and as I was mentioning at the start, that I would probably believe that this is a very good time where you should look to top up your IT stocks portfolios or large cap names at least. Now don't there could be a possibility that these stocks may correct by 3-5% first before these stocks bottom out. But what I sense on the long term charts and specifically on the prices, that these stocks have hit major oversold breadth on their indicators, and eventually as a process you would probably expect that these stocks would gradually pick up pace, move up higher. There would be a lot of negative news flow which could keep on hampering the near-term price trends for IT stocks. But then if you're a long-term investor, then I would believe that these price points for large cap names actually provide us good accumulative zones. So my sense is that I would suggest an accumulation for large cap IT names, including the likes of TCS, which you're holding.
Alright, and lots of queries pouring in when it comes to the IT pack as well as banking counters. But the next one that we actually have, Gaurang, is coming in for you. Bala is writing to us from Coimbatore, wants to know if you have any levels in mind when it comes to RVNL, because he did buy 500 shares at a buy price of 490 rupees. What do you make of this particular counter?
Well, so again, we don't have coverage on RVNL, that is Rail Vikas Nigam Limited, but as a sector, Indian Railways looks extremely promising because of the policy changes that the government has put in place over the last couple of years. There is a lot that needs to be done in terms of last mile connectivity. There is a lot that is happening in terms of modernization of railway tracks, trains, including railway stations, and new railway lines getting installed to have a better connectivity. So, as a sector, it looks extremely promising. Again, I won't give a specific bias and a note, but names like IRFC, RVNL, IRCTC, Railtel, these are some of the names which are very closely associated with Indian Railways, and they would be the end beneficiary in terms of progress in Indian Railways and, of course, earning visibility.
All right, so that's the word coming in. Kunal, this one's for you. This is Kusuma, who's writing from Pune. She would like to know about ABB, Havells, your outlook for the next 3 to 6 months. She wants to know if she can buy them to get 10 to 15% minimum upside is what she's looking at. She wants to know if this would be the right time to get in to get that kind of an upside.
Yeah, I think both these stocks, they hold a lot of potential. ABB, of course, is one of the formidable names, and the stock went through a decent 25-30% plus correction. I think led by many of its other peers also. But I think at current levels, what I can sense on the charts is double bottom formation, rounding formation for ABB, and the fact that the indicators have started to show signs of bullish divergence. Same is the case with Havells. The only concern which I have is with Havells is that the stock has this very odd tendency of being very reactive to the news flow. So I think in that sense, the beta of Havells could be a lot more on the higher side. And generally, when you have a high beta stock, you generally want to maybe resize your positions or look at exiting the stock a little bit more quicker. So that could be the only change of stance or a tweak which you could adopt for both of these names. But as of now, both of these stocks are a hold.
All right, then that's a whole recommendation coming in on both of those counters. Gaurang, I'll come to you with the next one because Vijay Lakshmi is writing to us from Bengaluru, wants to know about 400 shares of Indus Towers at a buy price of 397 rupees. Hold or sell? What do you think?
Indus Tower and?
Indus Towers is the only stock. 400 shares at a buy price of 397 rupees. Hold or
Okay,
sell?
so we have a hold recommendation on Indus Tower. One of the main infrastructure related providers for improving better connectivity as far as cellular services is concerned. Some concerns were there with respect to Vodafone Idea outstanding and dues, but resolution is something that we foresee as we go into the future. If you're holding it from a long-term point of view, Indus Tower, kindly hold on to it.
All right, moving on from Indus Towers, next question coming from you, Kunal. This is Balaji writing from Chennai. He's bought GNFC 100 shares at 700 rupees. Should he average in now, hold or book losses? Wants to know the holding period. Should it be for 6 months? What should he do with GNFC for now?
See, I would recommend a hold, for GNFC at current levels. Just that the volumes have started to improve slightly for the stock. So maybe over the next, say 1 week, if the market rally extends or at least the index remains at these elevated levels, you might probably expect that gradually the volumes may pick up for stocks like GNFC. And in case if that happens, you might probably expect the stock to come into a recovery, say over the next 1 to 3 months. The bigger concern is that I don't expect that these stocks would go into a V-shaped recovery in the near term. So in the second half of this market rally, you might probably be into a phase where these stocks may start to show a lot of high beta, and if the volumes also start to add up, you might probably expect that these stocks would eventually make a comeback. But I sense that maybe that comeback for stocks like GNFC could be a bit delayed. So which means that if your expectation is that you want to get out of the stock, say closer to your cost price of 700, say in the next 1 to 3 months, I think there could be a bit of a disappointment over there. You might probably have to extend this time frame to 6 months to 9 months at least.
Alright, then that's the take coming in. As far as GNFC then is concerned, Gaurang, we have the next query coming in from Nalini, who's writing to us from Ahmedabad, has mentioned that she's a senior citizen, wants to know about 3 counters actually. MOIL, 130 shares at a buy price of 208 rupees. Thereabout, SBI Cards, 35 shares at a buy price of 755 rupees. And also M&M wants to know if she should be selling or investing in M&M at this point. Now, the time horizon for all 3 of these counters is 3 years, so MOIL, SBI Card, as well as M&M.
Well, so firstly on Moyle and M&M, I would request her to continue to hold on from a long-term point of view. We had a positive coverage on SBI cards, which we have now turned it into reduce or sell. So in case if she is in profits, unfortunately, I don't know the level of investment in SBI cards or the other two stocks. The reason for giving a change in stance in SBI card is the concern in terms of earnings, visibility, and the headwinds in terms of competition. So if you are in money, SBI cards would be a reduced stroke sell or book profits. For the other two, Moil and M&M, continue to hold from a long-term point of view.
All right, that's the view coming in for SBI cards. Coming to you, Kunal, then. This one's from Thomas George, who's writing from Cochin. He wants to know that he holds 1,000 shares of CESC and 500 shares of KEC International. He wants to know if he can sell CESC and buy KEC.
It's a very tough one because I believe that KEC is a very strong stock, and of course the stock went through more than a 50% correction in the last 6-8 months. But then CESC is also emerging to be a more of a powerful candidate of a breakout. Now there could be a point where CESC or there could be other peers which could be better than CESC, like the formidable names like Tata Power, etc. So maybe that there could be a jump which you can or shift which you can do from CESC to some other formidable or frontline power stocks. But then I think KEC could be a very good buy. So I'm not sure whether shifting from CESC towards KEC could be a good bet. But I think if you can shift from CESC to some other stock in the power sector, and then maybe if you have additional capital, look to add KEC. I think it could be a very good bet because stocks like KEC, they rarely give you opportunities of a 40-50% kind of a correction. And ideally on the long-term charts, looking in the last 10-15 years of the history of these stocks, they should be taken as very good opportunities. So I think KEC is a good buy at current levels.
Well, then that's the take coming in as far as KC then is concerned. The next one, Gaurang, that we have is coming in from Rajiv, who's writing to us, who's a senior citizen, writing to us from the national capital, in fact, writing to us about Engineers India. From a 6-month perspective in mind, what do you think about this counter? Because when you take a look at the last 6 months, it's been quite tepid. When you take a look at the last 1 month, you've seen 10% or so gains come in as far as this counter is concerned.
Basically, when you are picking up a stock in construction, engineering, or capital goods or defense, you can't afford to have a 6 months time horizon. And with that kind of a time horizon, I am not in a position to advise. But just in case, if the investor has a mind to, possibly take a long-term view, and by long-term for these kind of sectors is absolutely, 18 months, 24 months plus, then we have a whole recommendation on Engineers India. I do agree with you that for the last 6 months, 1 year, the stock has absolutely not done anything. But we are extremely positive about the capability and capacity and the opportunity in terms of green hydrogen, because this company is a PSU company, provides infrastructure for enabling production of green hydrogen. And other than that, it has got a decent order book. You need to have patience with this kind of a stock. You can't be having 3 months, 6 months kind of a time horizon. Long term, hold on.
All right, that's taken Engineers India. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with your queries on the other side. Stay tuned. Welcome back. You're tuned into Buy Now, Sell Now, where we are getting all your questions answered by our experts. The number is flashing on top of your screens, where you can send in your queries with the stock name, the buying price, and the holding period, and we'll get your questions answered. Let's resume with all the stocks that you have sent us now. Kunal, this is coming for you from Vaishnavi, who's writing from Chennai. She says she's a big fan of yours, and she wants to know your thoughts on PCBL. For 10 months, she holds 48 shares. At the buying price for the stock is 410 rupees. The stock she feels is not moving, but she wants to know your take on PCBL from here on.
First of all, thank you so much for that. Now, PCBL, Philip Carbon, I've tracked the stock very closely over the last many years, and I've seen that the stock has this very erratic and odd phenomena of going into very silent phases of consolidation, where the stock gets stuck into a trading range. It tests the patience of investors, but then it tends to reward in a very short period of time, when the stock moves up 20, 30, 40, 50% also in a very short period of time. All you have to do is just about understand that whether the structure of the charts, or the price movement is on the positive side. So far, looking at the last 6 months of the price correction, as well as this recent rally for Philip Carbon from 350 levels, if I'm not wrong, to 430 plus where the stock is trading right now, I believe that the structure is extremely positive. It's just a matter of time. Maybe I think it may take few weeks, maybe it could take another few months for the stock to consolidate. But then whenever the price action kicks off back again on the momentum side, I would expect the stock to cross levels of even 480 to 500 for Philip Carbon. So I would recommend a hold.
All right, and that's Philip Carbon. That's the take coming in as far as that particular counter is concerned, Gaurang. The next one that we actually have is coming in from Moshami, writing to us about Eternal or erstwhile Zomato. What do you think about this particular counter from a risk-reward perspective in mind?
Well, a very strong competitor in the entire quick commerce. Though there have been concerns of late in terms of the competition that is coming up, and there could be some amount of earnings degrowth, if you will. But I think it is a little bit preemptive. From a long-term point of view, we remain positive on Eternal, that is Zomato. We have a buy recommendation. If you have it, hold on to it. And very recently the stock did correct from its high to, of course, the market also corrected. This also corrected close to about 200 or sub 200. And from those levels, we've seen some interesting buy coming in from a long-term point of view. So, and we expect, the dark store growth in terms of addition, which they were supposed to do next year, 26 December, they are already putting in place the capital required and they are working towards this, which will give us a niche advantage. They are also exploring possibilities of venturing into new markets, new states, which will also give market share growth from a long-term point of view. So long-term, hold on to Eternal stroke Zomato.
A long-term perspective, it's a buy call and hold on Zomato/Eternal. But coming to you then, Kunal, this question is for you on Wipro. Wants to know, this is Sharmishta who's writing from Kolkata, wants to know your view on Wipro. Can she buy Wipro at this rate? Now, all these IT counters have seen a fair bit of correction, Kunal, and they are, like you mentioned, at throwaway prices right now, especially the big IT names. Is it a good time to get into Wipro? What do you see on the charts?
See, other large cap IT stocks, I definitely believe that it's a good time to enter into these large cap IT names. But the only concern is with Wipro is that in the last two cycles of price movement for the IT index, and I'm calling it cycles because over the last 3 to 4 years, I've been extensively studying the stock and tracking it. There have been phases where the stock has been a huge underperformer. So I'm not sure whether there's any major change which happens on the fundamental side for Wipro as compared to the other peers. But then if the sector has to revive, then I don't sense that Wipro could be amongst the leaders which could lead the charge from the front. At least in the last two cycles, we've not seen that happening. Maybe this time around there could be a change, but so far I would believe that you should probably look out for the erstwhile stronger stocks and the leadership stocks to make a comeback. I think in that context, there could be a chance or a very high probability that Infosys, HCL Tech, TCS, etc., they could lead the charge from the front. And eventually, once the price action say saturates for these large cap stocks, you can look at maybe Wipro trying to play a catch up.
All right, and Wipro could be playing catch up, and that's something that we're penciling in as far as that particular counter is concerned. Gaurang, I'll come to you with the next one because we do have Gaurav writing to us from Bengaluru, wants to know about a couple of counters, so Interglobe Aviation as well as HAL at current levels for a fresh buy in mind. Should he be waiting for a pullback? Because when you take a look at Interglobe Aviation for the last 6 months or even for the last 3 months for that matter, stellar gains is what we're looking at.
Well, absolutely an outperformer. And right from the IPO time till the current date, we have been positive on Interglobe Aviation. New opportunities are definitely going to open up. We are very soon going to see commercialization of the Navi Mumbai airport in the month of June. That is what the date and the month has been set out. Up north, again, in the NCR region, we have the Jewar airport coming up. Other than that, under the Mission Udan 2, we have many more, regional connectivities coming through, which will have huge scope for airlines like Interglobe Aviation, that is Indigo, to scale up the operations. And of course, you have lower crude oil prices, though it has not translated into cut in aviation turbine fuel ATF. But nevertheless, we are extremely positive as far as Interglobe is concerned. So hold on to it. If you have it, if you don't have it, don't miss out on the opportunity. Many times what happens, while trying to find a bottom, you actually miss out on the opportunity. So instead of doing that, at least initiate it. Put some money at current levels, and as and when you get dips, you can add on to it.
Right, with that, we're completely timed out in this edition of Buy Now, Sell Now. We will take your questions tomorrow at the same time. But Kunal and Gaurang, thank you so much for taking the time out and answering all the questions. Well, with that, it's a wrap on this edition of Buy Now, Sell Now. Shreyansi and I will take a leave. Thank you so much for tuning in. Don't go anywhere. Markets at noon coming up next.